And I have to ask you about Yahoo because obviously you worked with Marissa Mayer when she was at Google. What do you think of this idea that they're not going to spin off the Alibaba stake any longer, but spin off the core business? Like, what makes Yahoo Yahoo?
Marissa's got a really tough job, and I respect the fact that she's walked into that and is trying. I mean, it's a really difficult problem to solve. Not having worked there and knowing the business intimately, it's hard to know what they should do. For me, with the stake, et cetera, I think seems to me the public market's undervaluing the core business. I know Marissa's incredibly smart, having worked with her, and so I wouldn't underestimate them. I also think low expectations help. I think expectations were so high when she entered the company that the lowering of expectations might help a little bit.
Why do you think the core business is undervalued?
I have a lot of respect for the ad engine that they have, and for I know there's been some stories about the number of people that have left, but there are still a lot of great people there. So I wouldn't underestimate that.
So Marissa came in and doubled down on Yahoo being a technology company. Some are saying that this is like an admission of defeat, that she couldn't execute her strategy. What do you think?
Oh, I think it's too soon to call that one. I think they're underestimating. It's hard to play armchair quarterback, and everyone's got a microscope on it or a magnifying glass, and I think time will tell. But being a technology company is not a bad bet to make. It's easy to look back. It could have been much worse had they gone in a different direction. So I wouldn't second guess that.
So what do you see happening to Marissa Mayer specifically, and her legacy, if you will? She's still really
young.
She's still really young, but this was she took a big risk, right?
She did.
She made a big bet.
But she's had an incredible career thus far, and I guess I am in the CEO role. Were I in the CEO role there, I would want more time and space to execute, and I think she's got great faith in her team, and as a longtime user of the Yahoo homepage, I know there's a lot of incredible content there as well. So I'm not as negative as everyone else seems to be on this.
What does Yahoo become?
It's a great question for Marissa.
All right. Well, of course, we're still waiting for official word on what exactly they're planning to do. But the pressure that we're seeing public tech companies under is a big reason why we're seeing a lot of private tech companies not go public. And I know you have some thoughts on that. So now that you guys are focusing more on mature companies, what's your advice to them about going public or staying private?
I think the pendulum has swung so far from, I lived through 1999-2000 as an internet company CEO and saw the carnage of companies going public way too soon that had no business being public companies. And now the pendulum has gone real far the other way. We have companies that could very well be public entities that are deciding not to. And I think there's a happy medium there. Sure, there's pressure that comes with it, but there's a rigor and a discipline that comes with being a public company that can be valuable and probably underestimated in some cases.
You said that you called the Square debut a success. Yet they went public at $9 a share, below the marketed range, below the valuation that they raised at privately. Why do you think it was a success?
Well, at the end of the day, it's a fundraising round. They set out to raise a certain amount of money. The stock popped, as I remember, the next day by like 40%. So they probably underpriced it. So it came in under the expected range, but they probably could have filled that book at a higher price. Also, it was a success in that it gives liquidity, a market of liquidity for employees and for shareholders, which is also part of the point of an IPO, and now has established them as a public company, as a brand, and I think there's value in that, and the market priced that into the price over the week that followed.
Uber at a $62.5 billion valuation. GV is a Google investor, an Uber investor. That is an unprecedented valuation for a private technology company. Is that dangerous?
Not physically, but it is an astounding valuation, but I think it speaks to the expectations and the impact that this company is having in the way we live our lives. And a lot of us to get around that a lot of young people don't aspire to own cars, that you can use Uber as a public service, like turning on the faucet and water is there, that you can expect a car to show up. And so I think it speaks to that.
Any concern, though, that they won't be able to live up to that valuation?
I have concern for any company, not just Uber. They've got a lot of work to do. It's still a young company. But any company at any valuation, if it doesn't live up to its expectations, is going to get hurt. I don't have particular concerns because I know the team and I know the quality of people that they're hiring. And so I have a lot of confidence in that.
And what do you make of the fact that, companies like Fidelity are writing down, Dropbox, Snapchat, Zenefits, that they are in the red for these valuations that got very high.
So I think what you've seen is companies waiting longer to go public. So people that would typically invest in the public market are investing in private companies. And I think there's been some surprise by some people that they're being treated like public companies. They're getting marked down in a way that is like transparent. And that probably will cause some entrepreneurs to be less anxious to take money from those investors.